Hello everyone, this is Andrew McNair from SWAN Capital, all the way from Jeju Island, South Korea. We're having a great time on this Hawaii-like gem of Korea. We decided to bring my mother-in-law back to her original home. She hasn't been back here in 46 years. But let's jump right into our July 2024 SWAN report. In this month's video, we're going to discuss some recent headlines that influence the financial markets, but I want to provide you some perspective. What does it really mean for you as a retiree? What does it mean for you and your portfolio over the next few months ahead? Now, as always, please stay tuned at the end of this video for a required disclosure statement. Now, at SWAN Capital, our market outlook remains cautious because of world conflicts, higher consumer credit, coupled with higher interest rates. And if you're a client of SWAN Capital, you've seen that we've been making changes to our portfolios, and I want to unpack why and what we're doing about it. Federal Reserve Chair Jerome Powell spoke in Portugal and said he was encouraged by April and May inflation data, and that the data does suggest that we're getting back on this disinflationary path, as he put it. He went on to say that despite the encouragement, it was too early to cut until the Fed sees further progress towards its 2% target. With the market at record levels, hitting over its 30th record high, the narrowness of the market could broaden as the pressure from interest rates start to ease. Rate cuts have been expected all year by market analysts, and the Fed has only constantly dampened those expectations. Yet markets have weathered higher rates nonetheless. Once we get on the front foot with rate cuts, we will likely see the rest of the market push upward to match the handful of high-tech flyers that have driven the indices to record highs. There is an ever-present possibility of geopolitics impacting the markets. All it takes is one shoe to drop, especially the distractions that we're seeing here domestically. The bottom line is that Powell wants to cut rates, but he needs a few more data points before he does so. He doesn't want to make a mistake. And so these Fed cuts will remain in the distant future until we see the 2-ish target hit. Now, if we don't see any rate cuts, we could start going into a rough patch as early as September and October. Now, turning our gaze to the job market. The ADP employment report came in slightly below consensus. We're talking 150,000 jobs versus 161,000 jobs. And it's been kind of misleading about unemployment. The unemployment rate ticked up from 4% to 4.1%. But get this, the new jobs were concentrated in government and healthcare, which have been highly subsidized from the government. And with this economic growth coming back from the government, if it pulls back, the growth in the job market will also evaporate. So the uptick in unemployment might be just the excuse the Fed needs to start easing the rates and starting to make those cuts. Now, let's remember that GDP, gross domestic product, was 1.4% in the first quarter. And now that we see unemployment over 4%, that's the kind of news equity markets have been waiting for. Markets are poised for the next leg up as the pressure on the Fed is clear. Unemployment is going up, economic growth is starting to slow, and this is a clear opportunity for the Fed to finally engineer that elusive soft landing we all hope to see. However, the geopolitical landscape remains really tense. The conflict in the Middle East has showed little progress towards resolution. Heightened disputes over territorial claims in the South China Sea, like this one behind me, have drawn international concern from Japan and Korea, impacting maritime navigation, and regional instability could ensue. Now, in Eastern Europe, the strife over Ukraine has remained a huge deal, and we've yet to see any resolve. We haven't seen a resolution. The market seems also to be waiting and holding its breath, seeing what's going to happen with geopolitical tensions. All the while, we have domestic concerns right at home. The market seems to be overheating. If you look at the Shiller PE ratio at 36, the Buffett indicator at 195%, all of these point to an overvalued market. Now, what are we doing here at SWAN Capital? We've been taking proactive steps by adjusting portfolios across all client accounts. Each time the market reaches new highs, we're cautiously reallocating some of our investments into more conservative portfolios. Now, of course, we're taking into consideration the tax implications if it's a taxable account, but this is the opportunity to actually reevaluate all the risks that we're taking within the portfolios to make sure that we're not overexposed if we have a major pullback. Now, if you're looking for a second opinion on your investment strategy, or as a client, you have your 401k allocations that you would like us to take a look at, we invite you to contact our portfolio management team by emailing portfolio@swan-capital.com. If you want to meet one-on-one to talk about your situation, either as a review or as a new client, definitely give us a call at 1-800-848-8768, and we'll be happy to talk one-on-one about your situation. Now, before I go, I want to highlight a couple of events that I would be remiss if I didn't mention. We have a great couple of events that are going to be in the community. At the beginning of August, we're going to be hosting incredible dinners at Jesse's Steakhouse in Magnolia Springs, Alabama. We're going to be there on August 6th and August 8th. So make sure that you check out this date on your calendar to see if you have a loved one, a friend, a family member that's closing in on retirement, and seeing if that works for their schedule and yours, and bring them down for a nice steak dinner. It's not a timeshare presentation. And if they need help with their estate plan or their finances, we'll be happy to help. Later that month, here in Escambia County in Santa Rosa, if you live there, we're going to have the same event at Grand Marlin on August 27th and 29th. Don't miss out on this opportunity to talk with your loved ones and see if it fits with your calendar to bring them down to one of our live events. Now, if you're a client, I want to encourage you to make sure that you're already RSVP'd for our halftime report. You don't want to miss our event that happens twice a year. The State of the Market and the Halftime Report are amazing events where I spend 45 minutes unpacking what's going on in the economy, where I foresee the markets headed over the next 6 months. And this time it's going to be at the AMC Theater at the Bayou Branch, August 3rd. So call in and RSVP to get all the details. Now, again, if you have questions about your personal situation, I create this video to give you an update about the markets, but this is not personal financial advice to you. So if you have questions about this report and how it impacts your retirement, don't hesitate to call our office. One last thing I want to talk about for the halftime report, the doors will open at 12:15. We're going to get started promptly at 1 p.m. And I want to make sure that you're RSVP for this event. It's going to be huge. There's a lot to talk about this report because, again, an election year, we're already at heightened market levels. It's a lot to unpack at this halftime report, and I don't want you to miss it. Now, if you've been to South Korea, I would love to hear why you came and where you went, especially if you maybe served in the military and you came here and you were stationed here, or if you've just visited. Drop a comment of where you went to in Korea, what you enjoyed when you were here. But I want to sign off from Jeju Island. This is it for this month's SWAN Report, and we're going to see you next SWAN Report next month. I want to thank you for listening every month, and we'll see you next time.